Hi, Steve Sosnick here with today's Interactive Brokers. I would call it a morning market morsel, but this is being done sort of early afternoon. The theme today is careful what you wish for. And the reason for that would be the activities out of the ECB, the European Central Bank. Basically, I think a lot of people, if they were told that a major central bank was going to be moving on an easing path rather than a tightening path, and going to be much more loose with their monetary engagement, I think most people would think that's a fairly bullish sign, all things being equal. But all things are never equal. And I think the rationale is that, and the reason the markets are down today, is that what's going on in Europe is not necessarily a good thing. They're not doing it for the right reasons. They're doing it because they're very worried about their banking system. They're doing it because they're worried about their lack of growth. I'm sorry if I skipped what they're doing. It's that rather than going to a neutral stance, they're basically going to be continuing a path of quantitative easing. They're doing it more or less explicitly to protect the banking system, which can't be very good when you're operating in an environment of negative interest rates. Depositors don't really love paying to keep their money someplace. Certainly doesn't bode well in terms of being able to lend it profitably. And so it becomes a vicious cycle. And what you saw was a big sell-off in the equity markets early. It has found a level and bounced. Again, I mentioned this a couple of days ago. When the Europeans stop selling, people usually take that as an opportunity to buy in the U.S., and that's kind of what we saw today. The market sold off, found a level a little earlier than usual this time, let's say between 10 and 10:30. And have been bouncing off the lows, but not really showing any great strength in terms of rebounding, at least as I'm taping this. The other thing to watch, which doesn't bode well for the U.S. stock markets, is that the euro is plunging, as well it should be. They're going to be creating a lot more of them, so they're worth less. A stronger dollar is not good for U.S. exporters. A weaker European economy is also not good for U.S. exporters. And I think that's why we're seeing some broad-based selling that has stuck. Again, not at the lows of the day. There have been some people buying the lows, but all in all, it's not a good backdrop. It's not a very positive environment as we speak. What I would say going forward here is we've actually seen a few days of declines in the U.S. equity markets. That's really nothing to panic about right now. Look at how far we've come, essentially without any real meaningful declines. I don't think we've had a weekly decline yet this year. So if we have a weekly decline, does that mean the end is here? No. Does it mean that caution is in order? Maybe. We're starting to see some pickup. The VIX has actually come off its lows a bit. It's sort of trading with a 16 handle rather than a 13, 14 handle. That doesn't show that there's any real fear in the market. One worrying sign, and I'm not alone in saying this, is that the transports have drastically underperformed the broader market. I'm not a huge believer in Dow theory. I don't know that one sector can be considered the benchmark, but the transportation sector is a very important economic bellwether. If you're making things, you have to ship those things, and the transportation sector is what does that. So the weakness there is not a good sign. All in all, not a very good day, not a very good backdrop for the markets as a whole. Again, careful what you wish for. If I told you that a big central bank was going to be easing monetary policy, that would sound good. But in hindsight, not so much. Take care. Bye.